I want to bring in Ben Stein, the financial guru, the New York Times columnist. I read you're in the Sunday business section every Sunday. Ben, thanks for coming in. Is this going to work?
It's an interesting idea. It's giving Wall Street what Wall Street likes, shooting fish in a barrel, something for nothing. Essentially, the federal government lends money to the big banks and other lenders, bond funds, other lenders, other investors, and says, we'll lend you the money and we'll guarantee the results. How can they go wrong? The government is putting up the money and guaranteeing the results, and the bonds and other assets they're going to buy are very, very cheap now by historic standards.
So when the government, the Obama administration, Timothy Geithner, and the president, they paint this as a public-private joint enterprise, what I hear you saying, it's mostly a public enterprise.
Well, it's private, they get the gain, public takes the risk.
So the private companies who are going to get involved in buying up these so-called bad loans, these toxic assets, they face no risk going into this?
But very little risk. It's as if you could buy a house out in Potomac and you could put up a very small amount of the money, and the government would lend you the rest, and the government would guarantee you against the loss. You would buy something, especially if it had fallen a lot from its peak. These assets that these banks and other entities are going to be buying have fallen enormously. They're probably going to make an incredible amount of money.
Limited risk, but they potentially, as you say, could make tons of money.
Incredible. They're going to be making so much money off these, it will be insane.
So what kind of institutions are we talking about?
Well, PIMCO is getting in. BlackRock will get in. I have no doubt Goldman Sachs will get in. All the big investment banks will get in. All of the big hedge funds will get in. I mean, it is what Wall Street likes, something for nothing. Why wouldn't they get in on it? If the loss belongs to the taxpayers, the gain belongs to the big boys.
So it's going to cost the U.S. government money. I want to play this.
I think it is going to cost them money, because I think when they buy these assets, the assets will pay off.
You think some of these assets will turn out to be productive?
I think they're very much better assets than the market says they are now. They're much, much better than the market says they are now. The market has hit them way harder than they deserve to be hit.
Because they're estimating right now, this chunk announced today could cost $50 billion to $100 billion.
Right, but I don't think it's going to. Historically, when these assets get way whacked down by the market, over time they recover and they pay off very, very well for the investors.
Listen to the president. He was on 60 Minutes last night, and he was asked by Steve Kroft whether there was an unlimited amount of money that the U.S. government can print.
If we don't get a handle on this and also start looking at our long-term deficit projections, at a certain point people will stop buying those Treasury bills.
Now, when he says people, what we're primarily referring to is like China and Saudi Arabia.
It doesn't matter if they stop buying. The Federal Reserve can buy everything we can print. There's no problem. The Chinese could sell all their bonds to the Federal Reserve like that. We could buy them, go on with our day. The Chinese threatening to not buy our bonds is a completely...
Because only the other day, the Chinese Prime Minister...
I know. He said, I'm a little bit concerned. The Federal Reserve can buy all the bonds we need to have bought.
So are you not worried about long-term national debt and deficit?
I'm worried about it very, very long term, but not for now. The important thing now is to make sure we don't have a depression and get us out of the recession. I think they're doing it pretty well, and I think Bernanke someday will have a statue to himself.
Ben Bernanke, the Federal Reserve Chairman.
I think he's doing a very good job.
And Timothy Geithner?
Timothy Geithner is doing better than he was. He's giving Wall Street what it wants. As I said before, they want a sure thing. That's what he's giving them.
Well, if you're looking ahead, give us an assessment. Right now, we've seen a 1,000-point gain in the past couple of weeks or so. Is it going to go back down? Well, is it going to continue to go up?
I cannot predict the future about the stock market, and neither can anyone else. But I will say that the policies are looking better and better, and all recessions have a bottom, and the bottom often comes when we least expect it. So we may be at a bottom. We may not be. Some very, very smart people who follow the stock market are calling a bottom. I don't know if it's a bottom or not. I just know that they are pouring money in. Eventually, it always has some effect. You cannot win betting against the Federal Reserve.
So when the Federal Reserve Chairman, Ben Bernanke, offers an assessment by the end of this year, early next year, the growth will resume in the economy, you think he's right?
Well, it's, as I say, you don't make much money betting against the Fed in the long run. He can't call the exact bottom. Even he, who has all the power in the world, can't call the exact bottom. But if he keeps flooding the economy with money, there will be a turn.
We're hearing from the White House and the Treasury Department. They're now thinking of coming up probably within the next week or 2 weeks or pretty soon some proposed new federal regulations to make sure the disaster that has occurred with the securities and all of that can never be repeated. Is
Right.
this a good idea
It's a
to
very good
tighten
idea.
regulation
Very
right
good
now?
idea. We still have a huge problem with the credit default swaps, which are a complicated instrument that's causing all the problem at AIG. Taxpayers are essentially eating bad wagers that these insurance companies made. That's ridiculous. Essentially, we had these big insurance companies and banks turning into casinos, making tens of billions of dollars of bets. If those bets go bad, the taxpayer in Dubuque or Des Moines should not have to eat
So you
them.
want the SEC to have a robust regulation?
I think they should end credit default swaps, period, unless they're an actual hedge.
Ben Stein, thanks for coming in.
Honor, sir.
Our pleasure.
But subprime is tiny. Subprime is a tiny, tiny blip.
It's not tiny, and again, it's not just subprime. It's the entire mortgage market, right?
All right, well, Tracy, you're disagreeing with.
Simply
To
wrong.
Ben's
Well, you're
point-
simply wrong about that.
No, I'm not.
You're simply wrong.
To Ben's point,
well, defaults
Neil,
for the whole mortgage market are tiny.
No, but it's good. Just give it time. Wait till all these mortgages reset.
Right now, it's time to get more for your money. Ben, what have you got, my friend?
Well, the financials, as I keep saying, are just super bargains. I particularly like Merrill Lynch, which is an astonishingly well-run company. But subprime is tiny. Subprime is a tiny, tiny blip.